Gwen's given a fantastic introduction there, but some important points. You know, we've been in such a deep, long downturn for the past 7 or 8 years post that Fukushima, the flooding of that nuclear plant off the back of that tsunami, that, you know, a few things have happened. Firstly, the combined market cap of our sector at the moment is about $12 billion. Pre-Fukushima, it was $130 billion. So the beta potential alone in our market is a 10-bagger, 10 times your invested money, potentially just from the sector rising generally. So, you know, not a bad investment theme, that, not a bad risk profile. And then if you look at the stories in the space, I guess it's been a question of survival of the fittest. There's probably only 30 companies that you could invest in at the exploration, development and mining stage. And so you really don't, you know, to look at and invest in the sector now is a pretty straightforward proposition. Just look, build yourself a basket of those uranium stocks if you believe that uranium thesis. And, you know, I always think that if you're going to invest in companies, what you want to be doing is investing in companies that do the work. And the fact that we're all here on a Saturday and presenting suggests that, you know, half the battle's won. I think Woody Allen said that 80% of success is just showing up. So here we are. So the Athabasca Basin, that's where we're exploring. If you're going to look for uranium deposits, you want to be where the biggest and best and highest grade deposits in the world are, and that's certainly the Athabasca Basin. Also a fantastic jurisdiction there in Saskatchewan, really always rates in the number 1 or 2 spot on the Fraser Institute survey of mining jurisdictions. You want to back a good team. Now, we've got a great team. Thankfully, I've got some seriously good people on our team. Of course, we're a spin-out of NextGen Energy. NextGen's our major shareholder. Lee Courier, CEO of NextGen's my chairman. I've got guys on board like Steve Blower, who's up the back of the room there. Steve led exploration for Denison for a number of years and led the team that discovered their Griffin ore deposit. So, you know, we've got a team with a great track record, and of course the broader team there at NextGen and on ISO's board discovered that Arrow deposit, which we took from, we took NextGen from a $10 million market cap to over $1 billion today. So good track record there. Timing's right, you know, we've been able to buy some great assets in that Athabasca Basin very cheaply. And we're simply leveraging our strengths. And I think, you know, Gwen mentioned something there about you've got to back people with a track record, back people who can raise capital, and we're in a very fortunate position there where we can raise capital, and we actually, you know, not bad going for a junior uranium exploration company. We raised $5.5 million back in December, so we're very well funded in that sense. I like to put down there at the bottom of that slide, size of the prize, cost of the test and chance of success. We're an exploration company. I spent 10 years with Rio Tinto Exploration, and we always looked at exploration stories through that sort of lens. So you want to be exploring where the size of the prize is right. Big tick for that in the Athabasca Basin. The world's biggest and best deposits are there. Cost of the test. Well, you don't want to be drilling holes that are too deep or too expensive, and in that eastern part of the Athabasca Basin, the cost of testing our targets is very modest. And then chance of success, you want to be in a province that's got a proven endowment for exploration, we think, and certainly that Athabasca Basin ticks that. Just on you know, I like to put this slide up there because a lot of people sort of looked at us when we started the company back in 2016 and spun those assets out of NextGen. Why would you be exploring for uranium in such a difficult and challenging market? Are you completely mad? Well, we put that up there. You know, when we started NextGen back in 2011 and 12, I think we raised money initially at about 5 cents a share. NextGen share price is about $2.50 today. So in the worst uranium market that we've ever seen, we've still managed to deliver shareholders there over 50 times their money from an exploration success. So, you know, that's why you should be exploring for uranium in the Athabasca Basin at any time. Just very quickly, a little bit on the macro picture and where we see uranium prices going. You know, the uranium prices performed very strongly, I think up 40% since April last year. Best performing commodity of last year, apart from vanadium. Interestingly enough, though, you'll see on that chart, at the end of each year for the past 3 years, we've seen uranium prices rise fairly strongly. Uranium equities have followed suit and correlated very strongly with that. Now that's broken now, that correlation. For the past 8 months, uranium equities haven't risen in line with the uranium spot price. And we think that that's because there's sort of an attitude from investors of, okay, well, a sort of head fake mentality, if you like, that prices are going to come back down. Well, I will tell you today that we don't think that uranium prices are coming back to where they were at around $17 or $18 a pound, because the rise in price is based in fundamental changes in the sector, and that is around the closure of some major mines. We've seen Kazatomprom, the world's biggest producer, reduce their production by 40%. We've seen Cameco shut the world's biggest uranium mine, McArthur River. They're not coming back on stream anytime soon. So we think that at some point this year, investors will realise that the rising uranium price is based in fundamentals and will start returning to the sector. So not a bad time to be looking at the sector. So a little bit in the last 5 minutes here on our properties. So that part of the Athabasca Basin there, the eastern half of the Athabasca Basin, some of the world's greatest deposits are there, of course, McArthur River, Cigar Lake, Cameco's major mines. Tremendous place to explore, you know, a lot of infrastructure, milling capacity, excess milling capacity, and then very importantly, access to people as well. So Saskatchewan's got some tremendous talent there. And our strategy is just so very, very simple. Put your foot on as much of that eastern Athabasca as you can, and then go and look for these new generation of deposits that we've discovered there at Arrow in NextGen, basement-hosted deposits. Most of the exploration that's been done in the eastern half of the Athabasca has never explored below the unconformity, below the basement, to look for those Arrow deposits, which turn out to be the best things to look for. And then the other thing about that eastern Athabasca area is pre-Fukushima, a hell of a lot of drilling was done post that last boom. A lot of mineralised intercepts were made out there that have never ever been followed up. So you'll see that on our property portfolio. We've got a huge amount of mineralised intercepts just to simply get out and follow up and look to see if those things turn into deposits. A little bit on that exploration model, just very quickly. The exploration typically, the mineralisation typically sits or has been discovered at that unconformity boundary. Our approach is simply to look below that and look for those Arrow deposits, Arrow-style basement-hosted deposits, which you see that yellow blob there is an example of. It turns out that, based on our experience with Arrow, that the best deposits are actually sitting below the unconformity, not at the unconformity like the McArthur Rivers and Cigar Lakes of the world. On that basis, you know, we've been executing on that strategy sort of in the quiet of this downturn that we've been through. We've been able to put our foot on some great properties. And as Gwen mentioned there, we've made a discovery in recent times. Back in June, we drilled one hole on our Geiger property. We acquired that. Now, this is a very good example of what we're trying to do here. We acquired that property off Cameco back in May last year. It cost us $300,000 worth of stock and $20,000 in cash. We had a drill rig out there within 6 weeks of getting that property, and we made a discovery hole there. We drilled 8.5 metres at 1.3% U3O8. So for you gold bugs out there, in gold equivalent terms, that's 8.5 metres at 22 grams per tonne gold. Very significant intercept. We only drilled one hole there, and what we're doing now, as we speak, we're getting some results in as we speak. So it's exciting times. The first of our follow-up drill holes at target depth there at the moment. Certainly based on the cross section there. Shallow mineralisation, really only down at about 300 to 350 metres. Huge, you see that red area around those drill holes, that's the alteration and uranium halo. Plenty of scope for more mineralisation to be drilled there, so look out for the news releases as we get to the target depth and start releasing the good news out of that hole. A little bit there on the mineralisation, you can see that uranium material there, the black rock in the centre, that's what you really want to be looking for, and you can see that we've got a big thick intercept of that there at our hurricane zone. And then beyond that, we've got a huge number of other excellent targets, and as I mentioned there, a number of mineralised intercepts that have been drilled by previous explorers that then didn't have the funding to go and follow those up, and you see that on our La Roque East property. You can see those red conductive belts and a sparsely placed number of drill holes there, so we've got plenty to follow up there, a long strike from our hurricane zone. And then our Geiger property, which we acquired off Cameco a year and a half ago. That property, you can see the conductive terrains there defined by those red lines. That's where we explore for uranium, and that's where the deposits are typically sit. You can see that we've actually got 5 mineralised intercepts there that are all significantly mineralised that have never ever been followed up. So that's what we'll be doing with that 5.5 million that we raised back in December. So that's it. A little bit on the work program, but very, very simply, the focus for us right now is drilling out that hurricane zone. So look out for those results as they come out. And then very importantly, the last thing, on our share price chart, we're performing pretty well now. We've raised most of our money at $1 or north thereof, but very importantly, only 68 million shares out. NextGen sits there with 53% of the stock. Cameco's got a good chunk of the stock as well. So, you know, free float in the story is very, very small. You know, about 20% of the stock is free float. So we offer investors a lot of talk for when either uranium prices rise or we put out good results, as we hope to be doing in the next few weeks. So that's it. Thanks very much. Thanks for coming out on a Saturday, and thanks, Gwen.